Hey everyone, this is Andrew. Welcome to Atomo. It is Sunday, March 12th, and we got a couple burning banks for you today. So if you haven't already heard, we got some US banking confidence on the doom loop here. Silicon Valley Bank, SVB or SIVBO. I'm looking at a Reuters article here. And Signature Bank in New York. That had to be closed, I think today. It's all moving so fast. So, first of all right. So, what's going on with the emergency measures that are being brought forward? Basically, FDIC is coming in. It looks like with support from the federal government, but not in a way it's going to use taxpayer money. Just trying to scan through the article here. Now, what they're looking to do is the depositors are going to be protected. It looks like up to $250,000 is the FDIC insurance. Now, this is deposits. Some of SVB's 175 billion in deposits were uninsured as the end of 2022. So here's the thing: when you want to bring on woke diversity hires, and it's like, well, what's the credentials that you hold for you to hold these management positions in these banks? Like economics, microeconomics, accounting degrees, working in what big companies before becoming a senior vice president at these banking institutions. What are you bringing to the game? Because the the risk Jay, the risk chief of risk management uh, at SVB, Silicon Valley Bank, is I think as woke as they come. Don't see, looking through social media and other posts, don't see anything about talking about banking. It's more on the injustices within the system. Well, good luck to you, because there's people out here that are pretty serious about making money and don't have time for these games. This is going to be a good kick in the pants for management groups, and I hope depositors and people who go to these banks look very carefully at the management profiles and determine that you got good operators that are in these institutions, making sure that they're keeping the risk profile where it needs to be in order for you to get your money at the end of the day and to run your businesses. Okay. So it looks like, yes, there is going to be some actions to make sure that depositors are good. The officials are saying that the firms are not being bailed out. The depositors are being protected, but the firms are not being bailed out this time. Again, so in the Reuters article that I will link in the notes, like Signature, and I'll quote from the Reuters article here: Signature, like SVB, had a clientele concentrated in the tech sector, and the securities on its balance sheet had eroded as interest rates rose. So, end quote there. So, what you could potentially see is the lending that they were doing, if they're lending to a bunch of, like, just say ESG type things, we're going to make the world a greener and better place, and you have all kinds of brouhaha that they're trying to put forward that really doesn't have any, it doesn't have value greater than the inputs of this money going in, then, well, yes, it might be better just to go and chase the paper with the rising interest rates than to bet on some of these, whatever it is that these investors. So this is a part of cleaning out the system and cleaning out the zombies. As Powell is pushing those rates up, then banks like this, who have a pretty weak portfolio of innovation companies that they're lending to, it's just going to get ejected from the system, and rightfully so. Okay. It says here that, quote again, as September, almost a quarter of signature deposits came from the cryptocurrency sector. Interesting. Deposits came from the cryptocurrency sector. Well, I wonder how much risk was left over from when FTX went down. If this might have been a constituent bank with FTX, I'd have to go and look at those connections just to see if the bleed out of FTX left a gaping hole in the side of Signature. And the bank Signature, that is, back to the article, announced in December it would shrink its crypto-related deposits by $8 billion. It's not insignificant. But yeah, I'll continue on here. While all customer deposits will be protected, new policies adopted Sunday will wipe out equity and bondholders in SVB and Signature Bank. So it's wipe out equity. So that means that if you're on the board because of an equity position, bye-bye under new management. So I have to see if the adult pants are being brought back in. On the note of crypto related, let me just again check a bit more here. There's a all right. So part of, got some other information I've been mulling through and trying to keep my ear to the rail all day today as this was happening, just to try to figure out what was happening. Yeah. Okay, so here's some. Now we'll start to get into some conjecture again. No financial advice, no legal advice here, no medical advice. I just take this as entertainment. We're watching the story unfold, and like with any analysis, an analysis could be wrong, but there are dots that are connecting up here. So first of all, shareholders in certain unsecured debt holders from a Fed announcement says that the senior management will be removed, and shareholders in certain unsecured debt holders will not be protected. Okay, so there's going to be some losses happening here. Again, wake up call. This is the whole point of why Powell's raising rates the way he is. He's looking to create these incidents. And where these incidents are going to happen, well, Daniel DiMartino Booth talked about a credit event. Oh, this might have been last year during the fall, when we're going with the rate hike, saying hey, there's going to be credit events, but it might. I think Powell is going to keep going and going. Maybe he might put a pause on March just to let some of this wind through the system and then get right back at it. Basically, it's just roadkill. What's the bank? SVB was about what, 200 billion, which is pretty much not a lot in the grand scheme of things. Like they've been throwing more of the money at Ukraine than looking to support our finance. It might be a part of the depending on where these banks are connected, might be blowing out some of the lines of money going into Ukraine, because potentially this is allegedly that a lot of that does go through, gets funneled through crypto channels. And the other part that the FTX Ponzi that was being brought forward is where FTX was using crypto to potentially buy other cryptos and stable coins using cheap money printed by the Fed. And once the rates started to rise, then people no longer wanted to play. So in order to keep your Ponzi going, you need more entrants coming in. But the entrants stopped because, well, once you raise rates, there's a better place for your money to go. Money will follow where it's treated best. It will go there. And so what we had is with Silicon Valley Bank, and there's a possibly even Signature was in on it as well, is they're looking to build a digital settlement platform that could rival all your credit cards and debit cards and payment cards are pretty much controlled. So if you wanted to bring something like a central bank digital currency into play, then you have to create a separate system for that, because Powell is not playing for the central bank digital currency crew. That's the Davos crew. They want that. So in order for them to build that, they need to get certain technologies built and out there and tested. And you need some banks to be able to sit on that, in that kind of supply line, so to speak, and build out the infrastructure for that. Now that Silicon Valley Bank has been blown up, looks like possibly allegedly one of the players in building the new crypto settlement platforms and Signature, they get blown out. They lose their management team, probably comes under new management. And the miracle here, that's why I call this channel, and then a miracle occurred. This can be, I think this is a miracle, that starts to unfurl. It's like, you're not going to take over the United States, and hopefully by transitive properties to Canada, we're not going to have a bunch of Eurotrash technocrats come and take over the colonies. So I think we might be seeing some controlled demolition here. Powell smiling behind the resting hawk face, probably going to show some compassion for what's happening and give here, we'll let our foot off the rate. There's going to be no pivot on this. You're going to be hearing a lot of calls for pivot. Don't think so. Maybe you're going to stabilize rates for a while. You can't start pivoting, because then the inflation beast comes back with a vengeance. And that is definitely something that Powell doesn't want to have on his Wikipedia article, that, well, hindsight 2020, and when we're bringing a wheelbarrow of money to pay for stuff, which of course that's why they would want a central bank digital currency, is in order to, you don't get money anymore, you get tokens and you get rationing in order to buy some of this stuff. So yeah, so you're going to see a lot of mainstream media, talking heads screaming. It's going to be all kinds of, just wait for Monday, see what kind of shorts are going on. But hey, it's good to see some of the elitist club get a bloody nose from this. So give it some time. Like this ESG bullcrap that's going on is going to take some bloody noses. Like I like greenification, I like decarbonization, I like those things, but it shouldn't come at behest of throwing a lot more people into poverty around the world. You just can't put the brakes on and say, nope, we're no more petrol-based cars for you. Uh, no more heating your house with gas. None of that stuff. Well, then all of a sudden, well, that's going to lead to a significant rise in the cost of living. We need cheap energy at this point in order to make the transformation to the more green economy, and that does take time. And there's these talking government heads, especially that we have in Canada. It's like, well, we're going to do this because it will speed things up if you don't have another option. It's going to make a lot of people poor. Those people are not going to be happy. But hey, in Canada, just completely to go on a tangent here, then they take away their guns and they take away anything that they can do to stand up and say, no, you don't like this, change course. And of course, big centralized governments don't like that. They don't like people being independent and standing up to them. But what we're seeing here is a bit of a kick in the pants of some of these lizard people who are, some of these lizard people who are kind of loading up their bazookas to, let's tear down the system because it's there's no equality in it and it's systemic patriarchy, and making money is making money. That's always going to be the thing. And yes, you can have your little Bolshevik revolution to take it over, but in the end, those that want to strive, the human ideal will be there. It will come back. It will tear down these facades that you want to build. It's not saying that I'm shilling for JP Morgan and the big banks and all that. Just, first order of operations is get the Eurotrash technocrats out of here. Second order of operations then is let's get back to rebooting the way that we do good, strong capitalism in a way that we build value, we make more jobs, we lift people out of poverty, and it's not done by printing BS amounts of money and having all kinds of cosmic justice projects all over the place. So keep an eye on this. I'm keeping an eye on this, and we'll see what Monday brings for us. Stay safe out there.